All right, everyone. So let's kickstart. Please confirm if you can hear me.
Yes, we can hear you. Sound and clear.
All right. So once again, welcome back to class. All right. And like I said, we'll be having a traders talk, and I'll be giving you insights on the stages that you need to follow through systematically to be able to fully become a profitable forex trader. Okay. So I know we always talk about having a trading plan, following your plan, avoiding impulse trading, stepping back after a losing streak, and all the other rules that make you a disciplined trader. But sometimes it feels like these rules only apply to you, the mentees. Are you following? Okay. It doesn't apply to the mentors. It doesn't apply to professional traders. Almost like mentors are superhumans and magically exempt from emotions or mistakes in the market. Okay. Like we don't feel pressure, we don't have the weight of back-to-back losses. Guys, mentors, professional traders, and not superhumans. I am not a superhuman. I go through the same cycle, the same mental battles, and the same tough days in the market. So the only difference here would be based on experience and mindset. Okay. The truth is, every trader, be it you a beginner, intermediate, or if you're a mentor, they all do experience the same challenges in the market, and we all face losses, impatience, hesitation, emotional pressure. We do. And like I said previously, the difference is simply in how we manage those moments. Okay, the only people I know that will not panic in the market are the smart money, the institutional traders, the banks. They don't panic because they are the market makers. Moving on, what makes a mentor legit is not just the teaching, okay? It's not just teaching you principles, strategies, trading plan, journaling, and all that, but actually, what makes you a good mentor is by living what you teach. It's not about preaching the rules, it's about following them. And as you all can see, we've had a lot of market experiences this past few weeks. That's why I personally decided to take a break. Okay. And I want to show you that it's absolutely okay for you to pause, reset, and protect your clarity. This is me practicing exactly what I teach. A lot of people feel like you just have to be on the chart every moment of the day. You just have to be on the chart every minute to see the chart to understand what you're doing. No, guys, it doesn't always work that way. Okay, many mentors hide their losses, many hide their losing streaks. They just show you only profits. Some don't even give you accurate results. I've been a victim, so I'm not telling you because I want to shame anybody, but because I have also been a victim. Okay, but you all know me. I am sincere and honest with you guys, and I show you the reality of the market. Losing streaks are very possible, and this is me working through my own process in a transparent way. Okay, and today I'll walk you through how I personally handled those moments so that you can learn how to handle these moments when you face them in your trading journey. Nobody is perfect and no trader is immune to losses. What matters is the system, discipline, and the mindset. Okay, so I'm not wishing you this phase. All right, I'm not wishing you to have this phase, but you all know the market is dynamic, and please mute your mic. The market is dynamic, and like I said, uncertainty can set in anytime. But when you do encounter challenges, what do you do? All right, some persons do not have an understanding of what to do, and that is exactly why I am here. So you can learn from my experience, not just from my wins. We are not always here to back profits, but experience would also help you navigate your way through the market. So for those of us joining us, all right, if you want a mentor who genuinely cares about your growth, if you want a mentor who is devoted to her team and her community, if you want consistent guidance backed by real market examples and real institutional knowledge, then you are in the right place. Okay, my goal is simple: to give you clarity, structure, and the confidence you need to become a consistently profitable trader using smart money concept the right way. Okay, so because there are a lot of wrong approaches out there. So if you are ready to grow, guys, I'm fully committed to guiding you through this process. Now, moving forward, let me show you the exact systematic approach I use to analyze what went wrong and how I built a solution that will help all of us get better as we progress, because I know that a lot of people are saying, Rity, come back. Rity, we need your signals and all of that. So if I don't build myself, we will all collapse. Okay, so the break is really worth it. So it's great to be back with you all, and I appreciate your patience over these past couple of weeks. As you know, I did took a time off because of the losses alone. Okay, even me, I was sad. I was unhappy with the losses. We are all human, like I said. I'm not superhuman. So, but because I wanted to be responsible enough to pause, evaluate myself, refine my approach, and make sure that when we resume stronger, clearer, and more profitable. Okay, so today's session is about transparency, growth, and an important lesson every trader must understand, which is having a break. Okay, even the best traders need time to realign whenever life gets demanding. So this is going to be a very insightful session, and I would really encourage you to ensure that you pay keen attention, because everything is not all about profits. Okay, even the right psychology would help you last longer in this industry. All right, so why did I take the break? Weeks ago, like I said previously, we had a losing streak, and many of you did notice that, and some of you did reach out. Some concluded my account was hacked. You know, my account was not hacked, guys. I'm not going to come here and tell you, oh no, my account did that. No, 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 I don't do that. I own up to my responsibility, and instead of running away from it, we look for a solution. So, and I also came out outrightly and told you guys, I've had enough, and I need to go for a break to evaluate myself or reevaluate myself. So after that, the break wasn't about the fact that I didn't value the community. It was, because of a lot of factors, the losses, and then I decided to evaluate what was actually wrong. I realized that my schedule became extremely tight. Okay, and as a day trader, I rely heavily on continuous chart time, watching price behavior, tracking liquidity, refining entries, and more. But during this period, and you all know this is a festive period, a lot is going on. My day-to-day activities increased, and I no longer had the long, uninterrupted chat time that a day trader requires. We have a scalper, we have day trader, we have swing traders, we have position traders, and all of these trading styles have different approaches, right? Now, that lack of dedicated time directly affected the quality of my analysis and eventually led to the losses we recorded. So I stepped back deliberately to reevaluate my trading plan, assess my personal schedule, identify what had changed, okay, and then to also understand what needed adjustments, and find a sustainable way forward to help me and you all and my amazing community of smart traders. So having done that, what did I discover? I know a lot of you be wondering what happened. Okay, so what's the essence of the evaluation? Honestly, after self-assessment, I realized the strategy wasn't the problem. I wasn't the problem either. Okay, could you guess what the problem was? Well, the comment section has been disabled, and I don't want to bug you all with so much chorus answers. So the real issue was time. Trading style requires specific time commitment. If you're a scalper, you need minutes by minute focus. If you're a day trader, you need hours of active monitoring. If you're a swing trader, you need less frequent monitoring, but more patience and broader market perspective. So whichever trading style you implement, you must pay a sacrifice. You have to. Okay, so my schedule no longer supported day trading. All right, forcing the schedule on that trading style led to some errors, some market oversight. So instead of abandoning the strategy or forcing myself to trade the same way in a different life circumstance, I adjusted my approach while keeping the foundation of the strategy. So to stay profitable despite a busier schedule, I transitioned to intra-swing trading. This means we have a news. I wouldn't know if it is a good news or if it is a bad news, but hopefully after the class, you would let me know if it is a good news or a bad news. But this is for the betterment of everyone. So basically, I transitioned from a day trader to an intra-swing trading. So this means I am not fully day trading. Okay, I am not fully swing trading. So then what are you doing? Because I am obviously not position trading, right? I wouldn't be a position trader because I'm not there yet, but hopefully one of these days I'll be there, right? So I am trading a hybrid approach between the both. So I am between a day trader and a swing trader. Due to my schedule, I have to see how I fit in to this approach to help us, still remain active. So with this approach, How would this help me? It will help because I'll be spending less time on the charts. I no longer need to monitor every candle, is this candle closing and all of that. And then we'll have more space to or let me say I will have more space to handle my other engagements. Okay, my schedule would become manageable, and also this will help me maintain high quality setup because the concepts remain the same, only the time frame and style did adjust. Okay, I did not change my strategy, I did not change my concepts, everything still remains the same, but the only difference is that the time frame and the style did adjust. So based on this, what are we anticipating? This will help us have longer term trading view. You know, oftentimes we take trades and we say we are hitting TP1. TP1 could be 20 pips, 30 pips as the case may be. But based on this, we can hold positions 1 to 3 days when necessary. And this will also give us flexibility and room to catch larger moves with less stress. Okay, this adjustment is not a downgrade. I repeat, this adjustment is not a downgrade. It is a professional evolution. Many advanced traders actually go through this, you know, as their responsibilities grow. Even some traders decide to be a scalper and they just look at one candle because of their experience. They just scalp that candle and they are out. Okay, because maybe that is what resonates with them. And some revolve from maybe scalping to swing trading because that is what resonates with them at that moment. Okay, remember I always say have a personal encounter with the market and understand what works best for you. And then based on this adjustment, it's also affected other segments with respect to currency pairs. Okay, so if you have noticed recently, I am dropping trade setups from different currency pairs. And you all know I was solely a fan of the Euro USD pair, right? But as we progressed and evolved, we decided to add some pairs because a lot of my students, amazing students, requested for breakdowns from different pairs. And when I looked at it, I was like, okay, there is a good trading opportunity with this. So based on that, I decided to integrate some of these pairs so that it could also help some of you to also understand that this does not just work on Euro USD. It does not just work on gold. It works across every pair. And I have students from across the globe, some from the Asian community, from Europe, from America. And if I cannot incorporate this, I believe everybody will be carried along. So we are going to be looking at that. So I've expanded from the usual 3 to 4 pairs to more pairs, including gold, oil, I know, and others. So if you are happy about that, just wave. Just wave. I just want to see your emoji. Just wave with your emoji. You're happy that we are incorporating more pairs. Okay, all right, thank you for that feedback. Like I said, one of the reasons is to incorporate everybody, and then this will also help us scan multiple markets too, because I don't have much time on the chart again. So to help us to identify clean structures, balance price, and get quality liquidity setup as well as clear directional bias. So by scanning more of these pairs, this will increase the likelihood of finding 1 or 2 high probability setups. Not like the other 3 setups were not high probability because of the, like I said, limited time for the chart. I didn't have that sometimes the patience or the clarity of the chart. But based on this approach, we focus on more pairs that gives a high probability. So I have more time to engage in my commitment, and then I also have time for the charts, patiently waiting for the quality setup. So this will help me because I wouldn't be spending much hours. You may not really understand this, but it's still the same top-down analysis we do. There's nothing different, but the only difference that I'm talking about is timing. That's the only difference. Strategy remains the same. Of course, I'll be sharing the setup, so you're going to see strategy remains the same. Okay, so this will allow me to trade efficiently, spend less time on the chart, and still deliver profitable opportunities to you all. I mean, you guys are my inspiration, right? You inspire me to do this. So based on this, our results will improve because the approach is now aligned with my current schedule. So go fund your accounts. You can use my recommended broker. If you can use your broker of your choice, it's not mandatory, whichever one that is convenient for you, but make sure you fund your account because hopefully this year is already wrapping up. So I don't want to give high hopes based on this year, but hopefully by the grace of God, next year, the world will hear of us. All right. So this adjustment is not only beneficial for me, it is also an opportunity for all of you to learn how professionals and pro traders like Rity evolve in trading. Okay, so the important lesson that you need to learn from this is that many traders, when they start losing, okay, they switch their strategies, they blame the markets, they look for new indicators, they start looking for new mentorship, they jump from one style to another. The first thing you need to do is to first of all understand what works, understand the principle. Once you know that, okay, this strategy, this concept works, stick to it. All right, you don't have to blame the market when things go south. You don't have to start switching your strategy because you trusted that strategy. Okay, so the first thing you need to understand is what is happening in the market. Is has the dynamics changed? What is going on? Is it about me? Okay, so most people try to shy away from blaming themselves. They are the perfect one. Okay, the markets, they know the market, so you don't have to do that because the challenge may not even be from the market, it may not even be from you personally, like directly. It may be a factor that is contributing and affecting you in the market. So don't just start looking for new indicators and start jumping from one trading style, to another trading style. So you need to define everything. So the first step is always self-evaluation. Like I said, that's the first thing I did. Am I following my rules? Am I consistent? Has my lifestyle changed? Okay, maybe you are working morning shift, which is affecting your, market routine, and then you've not been moved to night shifts and all of that. So you need to check all of that. Are you emotionally unstable? Do you still have the same time needed for that particular trading style that you are trading? So it is only after this evaluation, some may have external engagements affecting their chart time. Okay, I've had some students, they say, oh, they are working offshore, they do this. At that moment, please stay off the chart. Okay, and sometimes you may not really understand that this is affecting your trade. You may not really understand that this is affecting your results until you take that break, until you evaluate yourself, until you check your journal. Okay, that is when you start reflecting and seeing some of these things. So it is only after evaluating yourself that you should now move to start thinking, okay, I am okay, right? If there is no fault from your end, you now go to your strategy. Okay, then when you evaluate your strategy, you now know the next steps to take. So in my own case, after evaluating myself, the problem was not my knowledge, it was not my strategy, it was my schedule. And once I adjusted my style to match my life situation, clarity returned. And from the results so far, I believe last week, this week as well, okay, you saw the trade breakdown I dropped, and it looked like the Rity kind of trade setup, right? Okay, so more will be coming up. Okay, so that is one of the things that you need to understand. Okay, then a lot of people I hear say that once you have a family or a lot of responsibility, it becomes difficult to master forex trading. It is very relatable, very, very relatable. If you don't have adequate time, I always talk about being consistent. I always talk about patience. I always talk about practice. Trust me, even if I mentor you for 2 years straight, back to back class, and you don't practice for one single day, anytime you open your charts, everything will just be looking like magic to you because you're not practicing. But even if I just commit 1 hour a day teaching you and you devote your time practicing, I'm telling you, the results you will get, maybe next time you come to class and say, oh, Rity, I realized this, I discovered this, I did that, I did that. So it's all about personal experience. Okay, so having so much responsibility is relatable, and it's not just about forex. This applies to every career. Any skill becomes harder when life gets busy. So when you find yourself in this situation, the first thing you need to do is evaluate yourself and identify the approach that truly fits your current life reality. For you to be profitable, everything has to align: your strategy, your availability, your level of commitment, and even your mindset. Profitability in the forex market is not just about charts, it's about alignment. Okay, you also need to have a personal encounter with the market. And when I talk about personal encounter, I mean understanding the market for yourself, based on your own time, based on your personality and responsibilities, because you cannot rely solely on someone else's experience and expect their encounter to give you profitability. In trading, everyone needs to, put in the work. Okay, it's not like every other career. You say, oh, this person is my uncle, they bring you to the business and you're receiving salary and you're getting paid. No, this one you need to work it out by yourself. So everyone cannot be a day trader, everyone cannot be a swing trader, everyone cannot follow the same routine or the same structure. You must define your training principles based on your availability, your personality, your lifestyle, and the responsibilities around you. So this is what will help you identify find your identity as a trader. Okay, once you discover your trading approach that aligns with who you are and where you are in life, consistency becomes achievable. So this does not just have to be about forex trading. Okay, hey, hold on, I hope I'm recording. Okay, thank God. All right, so this does not have to be about forex trading. Regardless of any field you find yourself in, proper planning and alignment is very important. That's going to help you be more productive in that field that you are in. And if you're still finding it difficult to really plan yourself, okay, for my students, this is not going to be a challenge because you already have details, breakdowns, classes, PDFs, materials on how to manage your time, select your currency pairs, respect to your availability. I have broken that down for you all. Like I said in our topic, we've had a heart-to-heart traders talk. So moving on, I'm revealing the 5 stages that you should follow to become a profitable trader. Most traders skip the process, and that is why they spend years struggling in the forex market. So I want to highlight these keys. Okay, these are some insights I wish I knew when I started. All right. Okay. So after that, we would now head to the charts. Okay, and then I would take your questions. Like I said, today's session is not going to be too lengthy, okay, because I want you to really get this. And I've realized that a lot of people are struggling with this approach or this because, in fact, we are more diving into a season of losing streak. You know why? Because there's a lot of instability in the markets. Those position traders have been holding trade since January will start taking their profits around this period, and there will be this kind of choppy market behavior. And then those traders who do not really understand market structure, understand price behavior, will start trying to force trades to get money for a dirty December, and the market will take the money for the dirty December from them. You know, all those kind of a thing. So I think you should pay more attention to what I'm about to share with you right now. Okay. So number one thing, or in fact, I said there are 5 stages, and if you skip one of these stages, you're going back to zero. If you skip one of these stages, you're just revolving around the same cycle. So what is the first stage you need to pass through, all right, in your journey of profitability? Number one is to learn and master a strategy. Okay, at this stage your goal is not to make profits. A lot of us, including myself, when I came on board, the first thing I did, somebody can move $2 to $2,000 sharp sharp. I funded my account and I read, there are a lot of scattered information online. You just hear, when you see an engulfing candle as a support, buy. When you see a bearish engulfing candle as resistance, I was like, is it that simple to make money? I mean, guys, I really donated to the market, okay? And my indicators, my indicators were pro indicators. I had so many indicators that tell me to buy and sell at the same time, and I was following all of them. It was a beautiful sour experience, but I'm glad I am where I am. So I've had those experiences so that you will not have them. I don't know what you are still waiting for, but I cannot force you. The decision is yours to make. Okay, so like I said, in this learning stage, your goal is not to make profits. Your only focus now, or at the first stage, because I don't know the stage that you are at the moment. So the first stage, your only focus is to learn and master your skill or your mentor's approach. Because if you have decided that this person should mentor you, it means what the person is doing resonates with you. So you should, if you wish to or aspire to be like that person, then you should take the time to learn and master what that person is doing. Okay, study market structure, study liquidity, study entries, study confirmations, and price behavior. You need to build an understanding, not your results, because this is the first stage. A lot of people ignore this, just like myself. I ignored it totally. I ignored it and then jumped into funding my account and clicking the buy and sell button. And the funny thing is, you see that thing you're running away from, that money you don't want to pay for mentorship, that time you don't want to invest in learning, in studying, in practicing. That's what you'll be doing for like 5 years, 4 years without results. So why not just say, okay, I'm done with this struggle. Let me devote this time for this practice. Just like you devote time you gain admission, you study, you stay 4 years, some stay 6 years studying a particular course just to gain mastery and get certified, in that field. So why can't you also make that sacrifice for this one skill that will turn your life around? Okay, you get time freedom, financial freedom, just like you saw. It was encouraging into my other engagements. I adjusted it and I'll still make profit from it. I can stay anywhere to make my money. So why can't we just commit to that? But I'm not here to start questioning you. The decision is yours to make. Okay, so what will be the result for you when you do this? Learning and mastering a strategy. The result will be knowledge. You are now grounded with the knowledge. Now, after this, the next thing you need to do is to begin practicing. This is stage 2. You practice to verify your strategy. This is your demo stage. First, you were learning and practicing. You were practicing not with an account. Okay, you're not trading, you're just practicing, backtesting. Okay, this is another block. You go to the chart, you try to identify another block, identify it multiple times. The first time you try to identify another block, it will be a difficult task. The first time you're trying to identify an order flow, it will be a difficult task. The first time you're trying to identify a liquidity zone, it will be a difficult task. But once you you do it the first time, second time, third time, watch the speed with which or at which you would use to identify those zones. The 10th time you go to the chart. So before you know, it becomes a part of you. You don't even spend all the hours breaking down. So take it slowly, a step at a time, and before you know, you get to where you ought to be. Okay. So after that, like I said, the next stage is your demo stage. You practice consistently to verify your strategy. At this point, this is where you now confirm what resonates with you. The market is deep. The market is really, really deep. Where do I start from? Okay, so let's say this. Let me put it this way. Sometimes some price behaviors are dominant in a particular pair. Let's say in the gold pair, other block is more dominant. Probably it may not be that it is dominant generally for the gold pair. Probably at that particular point in time, the other block is dominant. Let's say in 2025, the other block may be a dominant, entry model in the gold pair. And then in EU, the other flow may be a dominant price behavior at that particular point in time. So if you are trading the gold pair and you're not trading EU, okay, so it means that if you're trading gold pair, you will discover that other block works well in the gold pair and you focus on that. But if you want to use that same approach on EU, it may not give you the same result it's giving you on gold. Why? Because that is the pair you're trading and you're interested in, and that's what resonates with you. So it is this period of practice that you will understand what resonates with what you're trading. Now, sometimes because of the closing time, every time frame have different closing time. Each 15-minute time frame means that each candle have a 15-minute time frame. On the 1 hour, the same thing. So sometimes the candlestick pattern that is prevalent on a particular time frame is different from the candlestick pattern that is prevalent in another time frame. Now it is based on this practice, you will know which candlestick is prevalent on the time frame you're trading. I'm a day trader. I can choose to use the 4 hours and 15-minute time frame. There's another trader who is using 30 minutes and 3 minutes. So you see that the candlestick patterns or that will help them make their decisions will be different because of their time frames. So you can only discover this when you have done your personal encounter and practiced on the chart. So you see that if you want to be profitable, you need to put in the work. Okay, so this stage 2, after understanding the knowledge, you practice what you know. This will help you confirm what resonates with you. And if you're my student, you already know how to identify what works best for you. Okay, at this point, you adjust minor elements like your entry confirmation. What are the things you look out for entry? Some people don't even dare aggressive entry. They don't even want to hear aggressive entry. And some people are the king of aggressive entry. Once they say, I want to go aggressive, that is the personal encounter I'm talking about. So you would not use another person's experience to judge yourself. Some persons don't even want problem in the market. Like they don't even want high blood pressure. If it is not a conservative entry, they are not interested. So these are things you need to define and say, okay, this works best for me. I'm willing to take this risk. I'm not willing to take this risk. This is where you filter those elements and those behaviors. This is where you gain personal conviction with what you're doing, because once you have seen this play out over and over again, that is where confidence comes in, right? So if you have a driving skill, you have confidence in driving because you have a knowledge of the driving, right? So this is where You gain your personal conviction because you have tested this. You've seen price move from order flow today. Tomorrow you practice, you see price moving from order flow. Next tomorrow you practice, you see price moving from order flow. Next week you practice, you see price moving from order flow. Trust me, next time you want to trade and you see price moving from order flow, you will go all in, right? So that is why you need to have a personal encounter. You don't rely on my results, but it should inspire you. Okay, you need to see it work for yourself. So what will be the result of this? What will be the results when you consistently practice? When you pass the stage 2, at this point you build confidence. First, when you learn, you build the knowledge. Second, when you practice, you build confidence. And then the third, remember I said is 5. I'm wrapping up. Okay, so the third is for you to trade live. Okay, I know at this point you're happy. Okay, so at this level you can start trading live, guys. You're trading live, but at this point your live trading is not to make profits. I'd have loved you to comment in the chat box, but just wave if you understand what I'm saying. Okay, at this point your live trading is not to make profits. The essence of you trading life is to focus on capital protection. Now, at this point, you fund a small life account. I'm not saying you should fund because you want to flip your $200 to $20,000 to $2 million, like some people are doing it online, right? I'm not saying that. Okay. Thank you for the feedback. All right. So based on this, you don't need to be too ambitious at this stage. Don't worry, there is a stage where you become very ambitious, but at this stage you don't have to be too ambitious. First, you are trading life to focus on capital protection. You're not focusing on making huge profits. Okay. Now at this point, you are not funding a big account, you're funding a small account. You're not funding your school fees. You're not funding your house rent. You're not funding your life savings. You're funding a risk capital, a spare funds. And remember, I said your goal is not profit. Your goal at this stage, this third stage, right? Your goal at this stage is not to blow this account that you have funded. Whatever it will take in this life for you not to blow that account, that's what you're doing. Whatever it will take you to trade correctly at this stage, that's what you're doing. Okay, at this stage, this is where you manage your risk. This is where you stay disciplined. This is where you maintain emotional control. Okay, so this will help you because if you can trade 3 to 4 months without blowing your accounts, this is it. This is it. You are now the king. Okay, you at this point you have passed the emotional stage, the psychology stage. You have passed it. Once you can master this skill, all right. So it's very important for you to focus first on building your capital, on capital protection. That will help you stay longer in the industry, because if you just fund your accounts and just start trading blah 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 blah, blah, you're just hitting the buy and sell button, you're not going to last in the industry because you're going to make money. Sure, I'm not saying you will not make money. You will make money, but you see that money that took you 1 month to make, you lose it in a second, right? So that is why you need to make sure that you have mastered this skill so that you will build consistency. Are you following? So what will be the results when you decide to trade live with the intention of protecting your capital, not to make profit? You know, everything is all about psychology. We talk about psychology, it's about the mindset. So when you are not so passionate about making profits, you'll not be over risking, you're building discipline, you're managing your emotions, you're managing risk at this point. Once you've done this consistently for 3 to 4 months without blowing your account, trust me, it will be nearly impossible for you to blow any account. So you have passed this stage. At this point, the result will be that you have mastered discipline and capital protection. Now, once you have now secured your capital protection, or once you have secured your capital, that means that is when we can now start talking about profit generation, because you now have the confidence that you are not going to blow your accounts. You now have you've built the discipline. So whatever that is happening, even if you know, even if you're giving 100 million, you will trade it. You will. I don't want to talk too much, but even if you give me that amount, I will trade it. Yes. You know why? Because I've passed that stage. And it's not just about passing the stage, because if you understand what I'm saying, you will know that profitability is not in the size of your account. A lot of people just look at it, oh, Rity, I'm not making money from this industry because I don't have money to fund my account. I'm not making money because my capital is too small. It's not the truth. Yes, it's it's not easy to grow a small account because you need money. You're investing so much knowledge just to move $1 to $2, just to move $2 to $3. It's not easy. I tell you the reality of it, it's not easy. Sometimes it seems impossible. But once you have mastered it, even if somebody give you 1 million, $2 million, you would move it because you understand the principle. If when I talk about market structure, I say the market is dynamic. Pull back today may not look the same way it appeared yesterday. Tomorrow it wouldn't, right? But once you understand the principle of a valid pullback, even if the market turns upside down, you will see it. You will understand, you will identify it. So that is the dynamics of whatever we are doing. So once you understand the principle of discipline, the principle of keeping up with your account, okay, once you understand the principle of capital protection, trust me, you'll be able to hold up with any account. All right. Now, moving on, like I said, the next stage, the fourth stage is profit generation. So at this point, you would have built the confidence, the discipline, risk management rules that will help you generate consistent profit. It's not generating profits, consistent profits. Okay. So now that you can protect your capital, that's where we can begin focusing on profits, right? You follow the system, you monitor your mistakes, you adjust your execution. Now you're not identifying pullback and making profits. It doesn't work that way. These were mistakes I made though, and these were things I'm like, I wish somebody sat me down and talked to me about this. So if you're really serious about your trading career come 2026, I'm not saying you must sign up with my mentorship. It's not mandatory. But go through these things that I have highlighted and work on them in yourself, right? Work on them and see if you will not become a better trader. Okay, so monitor your mistakes, adjust your style, your strategy, whatever that needs to be adjusted, and then build your profitability gradually. All right. So at this stage, you begin to see consistent monthly gains because you are repeating the process you have done before. You are not starting the process. When you're starting the process, you could make mistakes, you could do this, but now you have overcome stage one, stage two, stage three. So you are just repeating the process, and that is where consistent profitability comes in. That is where consistency. So the effect of this result at this stage is what? Consistency. All right. So number 5, at this stage, you are now becoming a profitable Forex trader. So this is the final stage. Okay. What is a profitable trader, or who is a profitable trader? So a profitable trader ends the month in net profit. When I mean net profit is when you remove your capital, you still have something on top. You still have profits, right? It's not you ending the month in a drawdown. Well, it's not out of place to be in a drawdown, right? But the fact that you can actually come off of that drawdown, you don't know the joy that comes out of it. If I make loss, I'm in a drawdown. I'm not worried because I have confidence in what I'm doing, right? But guys, do you think it's easy to make loss and you're telling your community, don't worry, we will recover? If you think it's easy, try it for yourself, not for another person. Just try it for yourself. So whatever I'm telling you is something I have lived by, something that I have worked with, right? So you need to pay more attention to that. Moving on, like I said, who is a profitable trader? At the end of the month, you have something for yourself, or at the end of the week, as the case may be, depending on your approach. Okay. Then you maintain consistency regardless of the market changes. Are you following? So based on this, regardless of how the market tweaks itself, like I always say, you are consistent. So guys, please ignore the links. Those of us joining, please ignore the links in the chat box. I was looking for a way to clear it, but it's taking my time. I wouldn't be able to figure that out now. All right. So moving on, a profitable trader has mastered psychological stability. At this point, remember you have passed through those stages. You follow your routine because you have defined those routines while you were passing through, while you were following your stages, while you were implementing those stages, right? You know how to adapt to market condition, all right? And then once you become profitable, you have long-term sustainability, regardless of what is happening. The other day, someone called me and said, Rity, do you see what is happening? That was during the US shutdown. So, Rity, do you know what is happening in the US? Dollar is falling. Please withdraw your money from the Forex market. I say, oh, wow. You don't know? When the dollar is falling, we are making money. When the dollar is rising, we are making money. So, this sustainability is amazing. Just take the decision. But it's not by force. So, financial freedom is personal. Okay, so this is not about one winning month. It's about repeated, reproducible profits months. All right. So the results of this stage is that you have long-term, professional, profitable trading. So what I want each of you to learn from my experience is this. Okay. Trading is not just about strategy. It's about alignment, your mindset, your schedule, your discipline, and your trading style must all be in harmony, right? A lot of people just be like, oh, I just want trading to be my side hustle. Anytime they remember the market or anytime they just hear somebody talking about the forex market, they go to the chart. It's something that you need to plan for. You don't just bomb into it by chance. You are intentional about it. You plan on how many years, months, weeks, as the case maybe you want to learn. Some 1 month they're already profiting, some 6 months. That's why I say you don't need to say, oh, this trader did it in 1 month. Do you know how long it took that trader to practice? And so this trader did it in 6 months. What if that is their availability and their time schedule? Okay. Some of them may not have family, like some singles. Some are singles, they have all the time for the chat. And some have so much responsibilities that they don't even have. So you don't need to say, I want to be like this person, or I don't want to be like this person. Some persons have people that give them money when they blow their accounts. So you're comparing yourself with them. When you blow your account, you need to go and hustle very well before you make another capital to fund your account. So it's a personal experience you need to encounter. All right. So if life changes, your trading may also need to adjust. That is not weakness, that is growth. We are entering this next phase stronger, more structured, and more prepared. Okay. So, like I have said, I just wanted to brief us on this because I realized that some of us are also gradually treading on the same path that I treaded a long time ago, and I decided that I deem it fit to incorporate the general community because they also had a taste of this same experience of losing streak. So it wouldn't be nice to just leave them out of this, and I decided to bring them in. And thank you, my amazing community, because we are full of love. Okay, I always say that there's no competition here. The money is more than enough to go around. The question is, how much can you fetch from the market? That's the question. So there's no competition at Rity Trader. We don't compete. We are committed to helping each other grow. And my students just prove that the values are still intact. Okay. So thank you so much, guys. Okay. Like I said, we are entering the next phase stronger, more structured, and more prepared. I have made the necessary adjustments, and I'm confident that moving forward, we will experience better clarity, better structure, better results together, and more profitable trades. Okay, so guys, that's a wrap on this. If there's anything you want us to work on, to adjust, to implement, I always listen to you, and I will always be here to guide you. So at this juncture, I would like to take your questions. Okay. You can just raise your hand. You can just raise your hand. Don't worry, I'll take your questions. Oh my God, our time is far spent. Okay, Mr. Nuruddin Moody, your hand is up. Can I take your question? You can go on with your question.
Yes. How important is prop firm in the growth of the trader?
Okay, prop firm is important depending on the stage that you are. I can show you tons of messages in my account. I hear and I see, Rity, I have 50,000 accounts. Can you help me manage it? For crying out loud, why did you buy the account when you cannot manage it, when you cannot trade? So you see that this trader at this point in time is already at the stage of learning, and you're already catapulting yourself to becoming a profitable trader. It will never work. It's not a course, but you blow the account. Even if you get funded today, you will not sustain it. Everything we are talking about is consistent profitability. If you're not consistent, it's not worth it. Because even if you make 100 million today, because you lack that skill, the right skill, you blow it up tomorrow. So purchasing a prof firm is very good if you're at a profitable, if you're at stage 5, okay, becoming a profitable trader. If you are at that stage, it's 100% okay. It will help you grow your funds, grow your capital. But if you're still in the process of learning and you're getting a prof firm, it will distract you. By the time you violate 1 or 2 rules, or you blow up the account, you will not even have strength to go to the chat to go and study. But when there is no traits attached to you or emotions attached to your learning experience, you have that devotion for the chart, for whatever you want to learn. Have you ever seen anybody give a doctor a license before their graduation? It's not done anywhere. But because maybe there is no regulatory body regulating the forex industry, so anybody can just come up on the chat fund and just start trading, right? So prop firms are very important, are very okay, but trust me, 99% of prop firms do not want you to profit. I have my own experiences. I've passed several prop firms. I can show you results, but it's not easy. It's not easy because, okay, let me just quickly throw this slide. If you're trading a prop firm and you're giving $10,000 to trade, please bear it in mind. The capital you're trading is nothing near 10,000. That 10,000 they are giving you is just like leverage. Leverage is like when you have $100, it is amplified to 1:100, means if your capital is $10, it is multiplied to 10 times 100, right? 1,000. So meaning the risk you can take on the $10 on the $1,000 account, you're taking it on the $10 account. So that's basically what prop firm is doing. So if they're telling you they are giving you $10,000, they are not giving you 10. You see that daily drawdown, that is the actual capital you're trading. So whatever risk you want to take it on that daily drawdown. That is the way you will not be able to blow up your prop firm account. But if you are relying on the normal capital they are giving you, what I'm trying to explain about prop firm is very deep and I cannot exhaust it here, but I believe you understand what I'm saying. So you can see that if you don't really understand the approach, you will still do the wrong thing. And trust me, the reason why I understand this approach is because I have passed the stage I'm telling you. So if you have not understood all these stages, if you have not passed through these stages, and you're going to trade prop firm, you will just donate to the organization and help them grow better, right? I hope I've been able to answer your question, Mr. Nuruddin. Okay, I hope I've been able to answer that. So, Mr. I don't know, Unique Phillips. All right. So please, can I take your question?
What strategy do you use, and what FX pairs works best with your strategy?
Okay, so this is the same thing I just explained, right? And I'm glad that probably you joined in late, but I did explain that. Moving on, we are going to be doing all pairs, all currency pairs. Okay, especially the majors. We'll be doing all of them. That's just to show you that this thing works everywhere. Hopefully, as time goes on, I may integrate crypto, but for now, I don't want to carry so much responsibilities, right? This concept works everywhere. SMC works on crypto, on your BTC chart. I have students who are trading BTC. It works on index. It works on your volatility, boom and crash. It works there. What was the question again?
Yes. What strategy do you use?
Okay, the strategy. All right.
FX based. Yeah.
All right. The strategy I use is SMC, Smart Money Concept. Okay, Smart Money Concept, and then a touch of price action, which is trend lines. That's what I use. That's what I teach. That is my perfect strategy. And honestly, to be honest, the SMC that I teach is very unique. If you go through my YouTube channel, go through the pre-Telegram community, check the breakdown and tell me one trader that drops breakdown like that. Just name one trader that drops breakdown like that for his or her community and tag the person in my Telegram. I am giving you that audacity. Nobody does that like me. I'm not bragging, but I am confident in what I'm doing. And this is coming from personal experience. It's coming from personal. Go back to my YouTube channel. I'm not bragging. There are evidences, right? Go back to my YouTube channel. I started as a price action trader, but it was not giving me what I wanted. I started off as a price action trader. Even my old YouTube videos were price action. But the SMC breakdown, right? The way I teach my SMC breakdown, the way I follow up on my community, I don't think anybody does that. So the SMC that I teach is very unique and has high level profitability, high value profitability. or high value results. Why? Because I trade the smart money way. A lot of retail traders trade against smart money concepts. I mean, like I said, I've devoted enough time for you all this period. I'm going to be dropping in a lot of educational content for you to understand why we trade the way we trade. Okay, I trade the way institutional traders trade, and this is built based on personal experience, based on continuous study. I know how many platforms I've been to, I know how many content I have watched, and how much I have paid to be where I am today. And I love when some people say it's too pricey, it's too this. There is no problem. Let's just hope it gets better. Okay, let me not digress. So moving on, my concept is pure smart money concept plus trend line, and it works on all pairs because you are trading crypto with money, you are trading boom and crash with money, and the institutions that are driving these zones, smart money banks, they are moving these prices with money. If this thing is all about exchange. If you're buying, there's someone willing to sell. So if you want to buy Euro USD based on your local currency, or those exchange rate and all of that, you have a counterparty who is willing to sell that same currency to you. So everything is all about money. What we are just doing on the charts is like, we have a back end. This is just what I call it, a practical, concept. But if you really understand the theory and the theory behind what we are doing, which is what I am teaching, then you understand how to approach the chart. The smart money are trading against every other trader. They are trading against the crowd. I became so worried that I'm like, why is it whenever I place a trade, the trade must hit my stop loss? You just feel like somebody is after you, like, maybe somebody has done something somewhere against you. Until I realized that this thing is just about liquidity hunts. Think like the institutions, trade smart, that's all. So if you can think like them, that's how you master what to do in the market. So my strategy is pure smart money concept, not like others. You can watch other smart money concept, watch my own, my on Rity Trader. We can watch the smart money concept that I teach, and then tell me if there's anything different, or if what you're seeing, there's a difference between learning and seeing the results and the impact of what you're learning live on the charts. That's what makes the difference, and that was what drew me to SMC, because it resonates with me and it works best for me. So I hope I've been able to answer your question, Madam Humble.
Thank you so much. Yes, you did. Thank you.
All right, thank you. So next is make something. I don't know.
All right. Yeah. Thank you so very much. We really appreciate you. I came from the general community. I'm not yet your mentee, which I am really hoping God, and I'm trusting God that I want to be there. But let me really appreciate your YouTube community. I have gone through your 17 videos that you put, particularly on the SMC, the smart money concept. It has been unique, as you rightly said. But I want to please ask that you've said something about pullback, valid pullback, how to identify valid and non-valid pullback. That is not in your video in the YouTube. That's one. Two. Okay, I've not seen, but I've seen 17 videos. I've not really seen that. Then secondly, I want to please also ask or say or request that this is Christmas time. You should see a way to give us some sort of bonus so that we can join your mentee.
All right, noted. Okay, Mr. Maker, like you said, I think that's the name I saw here. There's pullback. There is a pullback video in my program. I mean, if there is no pullback, then what are we doing here? Because on YouTube, I mean to say, because pullback is the first element of structure mapping. If your pullback is wrong, everything will be wrong, right? That's the first thing you need to master. Pullback, then you proceed to inducement, you proceed to identifying your POIs, your chalk zones, your BOS zones, and all of that, right? So if the pullback is not there, so guys, can you confirm, have anybody watched my pullback video on YouTube?
Yes, ma. I have watched your pullback video. Yes, ma.
Okay.
All right, thank you.
Thank you. I'll check back.
Five different examples.
All right,
I'll check back.
So just confirm. Okay, thank you. The next is Mr. Zoom user. I'm seeing Zoom user. I don't know. Mr. Zoom user. Sorry. There is no name. That's the name I'm seeing. So, what's your question?
Yes, ma. Good evening, ma.
All right. Good evening, sir.
Yes, sir. Yes. My question is about pullback.
Okay.
Now, for example, let's say you said the last pullback is our inducement,
Mm-hmm.
but if the pullback also take out the liquidity, like take out the eye of the previous pullback, you said that will become our break of structure. But it's also my last pullback. Should I time it? Should I look for POI at that break of structure, or I should time it as my inducement? I don't know if you understand me.
I'm trying to understand. I'm trying to get that. So, can you take the question again?
Okay, the last pullback you said is our inducement,
Yes. So,
but
let's
that
say,
pullback,
mm-hmm. So, this pullback is
that
your
pullback,
inducement. Mm-hmm.
it take out the liquidity, like take out the pullback, the
Okay.
recent high.
Oh, recent
So
high or low?
which are
Can you see my
yes,
drawing on the
which are
screen?
it has
Can you see my drawing on the screen?
Yes, we've seen your drawing. We've seen it.
So, Mr. Zoom, I'm asking, your mic is muted. Can you see my drawing?
you can see it.
Okay, so is this what you mean? Like liquidity has been taken from the low, right?
Yes, like the pullback is a valid break of structure.
All right, so hold on. I want to get that right. So the pullback now is a valid break of structure like this.
Yes, ma. Yes, ma.
Okay, so what's the question?
Now, since it is our last pullback, is it a valid origin to look for entry, or is an inducement?
Okay, sorry, please, I want to confirm. You are not a mentee, right?
No, ma. I'm
Okay,
new, but I've
okay.
watched.
All right,
Yes, yes.
so there are different dynamics and approach to this, but let me just simplify this. So if this is inducement here, right, and then this is our break of structure, okay. So since you said you've been practicing, let me hear from you. What zone would this be? Based on market structure breakdown, what zone would this be?
That would be our change of character.
Awesome, awesome. So this would be our change of character, right? So now your question is, assuming there is no inducement zone, if this zone can still be our inducement.
Yes, ma. Yes, ma.
Okay, right. So certainly this is our inducement, and this is also our change of character zone.
Okay,
Okay,
ma.
so
Okay,
this is our external
ma.
liquidity. The essence of inducement is to grab liquidity. So this is also telling us that this is another liquidity structure. But assuming there is an
Okay.
inducement here, let's say there is an inducement, right? Then we identify a POY that does not exceed this
Why?
chalk
Yes.
zone. But since this is your
Yes.
inducement now, this is your inducement, does it mean we should identify a POY here? No. Don't look for a POY here because this is also your change of character zone. Are you following?
Okay, ma.
However, like I said,
I'm following.
the dynamics differ. And market structure is not the only thing that guarantees your profitability. There are other elements like top-down analysis. So if your higher time frame, let's say there is an inducement here, I'm not supposed to share this with you, but because you came to class, let me just share it with you, right? So this is your top-down analysis. This is your let me say this is your 4 hours inducement. This is your 4 hours inducement. So because of this 4 hours inducement, we can consider this POY to buy.
Okay.
Are you following? Why? Because price may
But
still come for your higher time frame liquidity. Are you following?
okay.
So in this case,
Yes.
you need to integrate your higher time frame and your lower time frame structure. So you see that I tell you on YouTube, and which is valid, do not buy when price is beyond your choice zone. But sometimes we may not be able to divulge everything. Like if you had not asked this question, you may not get clarity, right? That is the essence of mentorship. That is the essence of the consistent guidance I am talking about. So a lot of people feel like, oh, free content is this, I'm not against that, right? I still got some insights based on free content. All right. So, but then when you commit yourself to a mentor who is knowledgeable about the market, it will also give you more insight and also help you scale faster. So based on this, right, when your higher time frame inducement is located beyond your choice, and then you know that this change of character is an internal move to grab your higher time frame liquidity. it does not mean that the trend has reversed. Okay, so in the top-down analysis in the program, we also share insight on how to, follow the dynamics of the market regardless of certain price behaviors, right? There are times we even buy and sell without inducement. It is an understanding of market behavior, all right, and the market condition at that particular point in time. Are you following? So the market is deep, like
Yes.
I always say, and there are several elements that contribute to your profitability in the market. Are you following? So we don't just say every time price must take out inducement. Yes, we follow those principles, but there are exceptions, and those exceptions are dependent on certain market condition and certain price behavior. Okay. Now, break of structure indicates, continuation, but there are certain price behavior here that will indicate that this market is not about to buy. It may need a deeper pull, but it may sell before the buy. Can you identify that? Once you don't know it, you don't know it. So it's either you miss that entry or you get trapped because of lack of knowledge. So I am trying my best on YouTube, and I'm still going to be dishing out more information. However, there is nothing like attending classes like this. You ask your questions, you gain more clarity and more insights of the market. Okay. So next question,
Yes,
wrapping
ma'am.
it up. I hope you're clear on that.
But I have another question, ma'am.
Okay.
It's about order flow.
All right.
So let's fact that my order flow, it has FVG. But inside my order flow, we have another minor order flow that also have FVG.
Mm-hmm.
And there's also valid order block. Which of the three should I pick as my point of, since the three of them are valid?
All right. So we have an order flow. For example, we have a minor order flow, right? And
Yes,
then we have
ma'am.
an order block right here.
Yes,
So based on
yes, ma'am.
this, we have 1, 2, 3. Which of these we price mitigate first?
The upper order flow.
Good. So you pay attention to this one first. Observe price behavior
Yes,
here.
ma'am.
Entry price behavior, either aggressive or conservative. You observe. If it fails, right? So there's one thing. It is one thing to identify a signal on the chart based on your entries. One thing to confirm the signal. Okay, there are signals scattered everywhere on the chart. So the difference between retail traders and smart traders is that smart traders wait for confirmations. There are signals everywhere that will tell you buy, sell. But to confirm that signal, that is what will help you filter invalid signals. So when there is no there will be a signal here, quite all right, because this is a zone, price will react here, there will be a signal. But when price fails to confirm the signal, it will not. When price fails to confirm the signal, right, you don't get in on the trade, and that will help you not to get stopped out or to risk your capital. I don't know if you're following. Okay, but once
Yes,
the price is
sorry.
ready to move, you know buyers and sellers move the market, and the candlestick represents what the buyers and sellers are doing. So if the market is ready to move, once you click sell, the market moves, right? So if the market is ready to move, the institutions are involved, you will see it clearly on the chart. You will see it very clear. Hey, you will see it very clearly. Okay, so that is why I always emphasize on waiting for signal confirmation, not just a signal. Are you following? All right.
Yes, yes, ma'am.
All right.
Yes, ma'am.
So now moving on. If this one fails, if there is no confirmation, it would come into this zone. It will react here to induce more buyers. If there is no confirmation, it will come to the extreme zone. If there is, it will not give you a confirmation if it's ready to move. Sometimes it could give confirmation, move a little, and maybe the liquidity from there is not enough to fuel the next buy phase. You start pulling back to grab more liquidity. In that case, that is why we say the market is full of uncertainty and you need to implement proper risk management. So at that point, your risk management will save you. However, oftentimes, if the market is not ready to move, it will not give you a signal confirmation. You will see a signal, oh, quite all right. In fact, why I say there is always signal, because when you're buying, someone is seeing a sell. Why is the person seeing a sell? Because the person is seeing a sell signal. The person is seeing a buy signal. So there is always signal on the chart. If that's what you are looking for, you will see a lot of them. But to get good trading opportunities, you need to focus on signal confirmation. There are several signal confirmations which I teach in this program. Okay.
Yes, ma'am. Yes, ma'am.
All right. So However, if you enter from here, that's why we talk about decisional POI, extreme POI. They have different probabilities and they have different entry approaches and how you follow them. Okay, so if you have price around this zone, you wait for this zone. If you get stopped out, you wait for the extreme zone. So decisional have higher probability, and and so on and so on. They are decisional have lower probability, I mean to say. Okay,
Yes, ma'am.
so all
Ma,
right.
one more
Yeah.
question, ma. Sorry.
Okay.
Now, let's say the market approach my POI, and I'm looking for. I should go to my lower
This
time
guy
frame.
wants to take everything for free.
Like
I like it.
I went
All
to
right.
my
It
lower
sees the
time frame.
opportunity very well.
Yeah,
Okay.
look for character on my lower time frame.
I didn't get that.
Is it-
Sorry.
Let's say the market approach my POI.
Okay.
So I'm looking for a change of character on my lower time frame as like
Okay.
confirmation entry.
Okay.
Yes, ma'am. So for me to mark my eye for my change of character, is it the last pullback that approach the POI or the second to the last pullback? Since the last pullback is always like an inducement.
The recent pullback.
That's my question.
Okay. The recent pullback high. This.
Yes, ma'am.
Yes.
Should that be a change of character
Yes.
or an inducement? Okay.
Internal change of character.
All right, ma'am. And
Exactly.
ma, about single, yes, ma, about
It's
single
okay.
candle order block you mentioned.
I don't take a mentorship. Go and take a mentorship. So you come
I
and
want
learn.
to. Okay. Do you know what? Let me take other questions. Right. Let me take other questions. Okay.
Okay, my question is, sometimes after your setup and everything, maybe you're waiting for price to get to your point of interest, and the price got to your point of interest, but you are not there to take that trade. So severally I've had that challenge, and I was like, how do one? Is it that can we still utilize buy and sell limit, or must it be at market price? I don't know. I don't know what you have to say about buy and sell limit. How good it is
Okay. All
to
right.
trade in.
Like I said, the market is dynamic, and whatever we want to do, there are conditions. Okay. There are conditions that actually give you a go ahead to implement whatever you want to implement. Are you following? So let's say, for example, you have an aggressive entry. You don't use a limit order for an aggressive entry. Okay. But you can use a limit order for a conservative entry. Are you following? Because everything has been confirmed. You just need a trigger. Are you following? But based on my own personal decision, I love to see my confirmations before I move. Except the condition. Let's say the market is in a strong bullish trend and my confirmation is clear. And let's say maybe that is an extreme POI. Like I said, market condition will help you, take certain decisions in the market. So there's some condition that will make me, take a limit order, but 80% of the time I don't go with limit orders. So if you want to really follow up on your trades, you can set an alert around a particular zone. So let's say I was anticipating an entry from here. All I need to do, I can hover my mouse around this zone. I'll right click. So when I right click, I click on add alert on USD CHF. You can see the number here. Okay, so if I effect that, click on create, you can adjust the exact number here. Okay, so you can exact the number here, input the exact value of the zone that you want it to be at. So once you do that, you can see the alert has been triggered. So it has been effected on the charts. Can you see that? Hello, ma. Can you see that?
Yes, ma. Yes,
Okay.
ma.
Please, you can call me Rity, all right? No, ma. Okay, so moving on, we have the alert tool on the chart. Okay, then once you do that, when price gets into this zone, if your system is open and active, you would hear the beep. But if it's not, you just get a notification on your mobile device. That is if you allow email push notification, something like that. But oftentimes it doesn't give a beep on the mobile device. I don't know why. But on the laptop, you get a sound notification. You can even set the tones that you want. Okay, so once price gets there, you hop onto your chart and observe price behavior. If it is the 15-minute candle you are anticipating to close, you can wait for the candle to close and then make your trade decision. So that's one of the ways I approach that. Is that clear?
Yes, ma.
All right.
Thank you. Thank you
You're
very
welcome.
much.
You're welcome. Last question, Prince Humble. I thought I took a question from Prince Humble before, but since you said I did not, so you can go ahead.
Okay, can you hear me now?
Yes, I can.
Okay, so I said mine is not much like a question. So, but I want to appreciate you more concerning it because this has been this is my major problem based on everything, risk management and the other. Say again. So mine is not all about the strategy, but the risk management. So I'm a full SMC trader. But what I find difficult is that most often I'll just find myself that is either I blow my account before the market starts moving to my direction, or that I did an early entry. All this kind of thing. Just risk management that has been my major problem. But
Early
just
early
thanks so much for
entry.
the clarity.
Okay. Early entry
Yeah,
is not risk
exactly. Early
management.
entry. Yes.
Early entry is not risk management.
Yeah,
Oh.
it's just part of my problem. It's just part of my problem.
Okay. So Mr. Prince, you're trading live,
Yeah,
right?
yeah, I trade life. Yeah,
Okay, okay, good, good. So, did you come in from the beginning of the session? Like, were you in the class from the beginning?
yeah, I'm from the beginning. Yeah,
Okay. All right. So you got an understanding of the stages that I did mention that will enhance your profitability, right?
Ex-
Okay.
exactly the 5 stages.
Yeah. So, when I make available this recording, make sure to go through it and make sure that you've been able to fight that. However, the challenge here now may be that you lack the knowledge, because it's one thing to know something and it's one thing to implement what you know. So you cannot fully implement what you don't know. Okay. So I have
Exactly.
listened to some of your requests regarding discount and all of that. I'll still see to that, because guys, next year I'm still considering upscaling the pricing, because the value I'm dishing out next year is going to be bomb, right? But I know things are not so rosy. But sometimes you just need to make the sacrifice, because when you remember the sacrifice you made, you take it very seriously. And when someone pays for this, I take that person very seriously. And that is why I commit to my students, right? I commit to them, very well. So, just like you have said, you need to work on patience. You need to be patient to wait for a signal confirmation at your entries. So if you're forcing an entry, it means you're still trying to manage your emotions, you're still moved by impulsive candle. And one of the reasons why you are emotionally unstable whenever you see those kind of moves to start executing your entry is because you lack the right knowledge of what to do. Because if you have the right knowledge of what to do, you will not do the wrong thing. You will wait for the right thing, because you know that doing the wrong thing is exposing your capital to risk. So mentally, you put yourself in
Yes,
check.
exactly.
Are you following? Then when we talk about
Yes,
risk
like
management, yeah, so when we talk about risk management, a lot of factors also contribute to your risk management plan. Do you have a fixed lot size?
yeah,
What is your risk tolerance? How much are you willing to lose on that trade? You need to define that before you even start executing your order. But once you just see price at your POI, you just execute 0.5. Some people will say, oh, this lot size is too big. They start reducing, they close the trade in loss first and start. No, 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 no. You're gambling. You need to plan your trade first. What is the loss? Look at where I'm anticipating an entry. Okay, what's the pips? You calculate the pips. You know this, you know that. My students already know how to navigate around this, and I
because
have a
I think
detailed.
I think my major I think my major problem, yes, because sometimes if I will do this, I will have a plan this but for me to stick to that plan, that is my major problem again. Because there was a week like this that I made the roofing. I made over 300% of my account for that week. Then the next week, being on Monday, and that Monday was my losing day. I will tell you honestly, the time I lose, I was trying to recover. Before you know it, I went into a return trading, so which cost me a lot.
All right. So like I was talking about this. okay, then you need to do a self-evaluation, just like I have done, right? Having a losing streak does not mean that you blow up your account. Okay, it could get to a point you should have a percentage. That is why I said everything has to do with planning. There's a percentage of your account that you will lose. You go on a break. You need to plan yourself. You go on a break, you come back to evaluate, okay, what went wrong? Did I over risk? Did I do this? Did you evaluate yourself? You evaluate your strategy, just like I said when we started off from the class. So when you evaluate everything, you know where the problem is coming from. You try to readjust. Okay, so now you have discovered that your problem, like you mentioned, was entries, like patience with respect to your entries, and then you talked about risk management. So risk management is very important. Okay, how many percentage of your account are you risking per trade? And not just per trade. You can be risking per trade and you're over risking. If you're taking 10 trades in a day, that means you've exceeded your plan. So there are so many factors, beloved brethren. There are so many factors that I will not be able to exhaust in today's class. I mean, we've done enough today, and I think that's the last question I will
Yes, ma.
be taking today.
Please, ma, I have a question. I have a question, ma, please.
Mr. Zoom, you are the
Hello, ma.
highest bidder in this place. Okay,
Please,
our time is
tell me
fast spent.
it's about demand zone and supply zone. Like, how do I
Okay.
identify valid supply and demand zone?
All right, so I'll be discussing that in my live session on Monday. You're a student, right?
Please, no, ma, I'm not a student.
That means you have to come on.
I'm not,
That means you have to sign up. Oh, okay. So
ma.
sorry, Mr. Zoom. That'll be all for
Please,
now.
how much is it to sign up? That's my question. I'm so sorry. How much is it?
It's 175.
If you can send us the link. Thank you so much.
Give us the account. Oh, thank you. God bless you.
Are you in the Telegram
Ma,
community?
yes, ma.
I have already dropped I have chatted you privately, sir.
All right, no problem. So
Please, this video, are you dropping it on Telegram, or are you dropping it on YouTube, or are you dropping it in a private?
all right, so I'll drop it in Telegram, and hopefully I'll consider those on YouTube.
Just demand zone and supply zone, ma, please. Validity for demand and supply zone.
Mr. What's your name? Mr. Zoom. You have really given me tough time today. You've stressed me enough. But that was not actually stress. I love to give back to my community, and well done to have come to class. But let me just quickly brush it off. Okay.
Thank you, ma. God bless you, ma.
All right. A supply zone actually, right, indicates where selling pressure started, area where sellers started getting into the market. Okay. Now, a lot of people mistake support resistance, supply demand zone. Are you following? So let me just quickly pull this up. Just hold on. Can you see my screen?
Yes, ma. I can see your screen, ma.
I mean this. So this
Yes,
is
ma.
a breakdown of some of the insights in our mentorship platform, and next year is going to be bomb for my community. So I did break this down. Okay. Oh, if I record this, I'm going to be exposing all of these. So I have over 30 PDFs, okay, for my community, and I already have some on ground, and some will be launching next year. Okay, so I believe my mentees will be super excited because they know the kind of value that I dish out in the community, right? So this is basically an example of what demand and supply implies. Okay, so a demand zone is where, buying pressure, demand exceeds the supply. So when price is sitting at a particular zone, there is a buying interest. There's also a buying interest at that particular zone. Okay, so this thing is deep, and it will take me a lot of explanation for you to be able to understand this, right? But one thing you need to understand is that the supply and demand zone needs inefficiency. Are you following? And there are ways by which we spot our supply and demand zones based on candlestick patterns. So oftentimes, I know you may have wondered, why don't I pay so much attention to supply and demand zone? The reason is because they are often found around our smart money POIs. Are you following? Okay, so supply and demand zone, sometimes you find it around your order flow, sometimes you find it around your order block. So since they are almost all embedded at a particular zone, then we pay attention to the smart money POIs. However, some people trade supply demand zone without inefficiency, without FVG. But all the POIs that I teach and I have taught, there ought to be imbalance. Okay, you need to identify an imbalance before your POI, because that is a clue. That is a footprint of the big players. That is a clue that the institutions were sitting around, actually moved from that particular zone, and they are likely returning to fill that imbalance and initiate their remaining position. And we want to trade alongside with them because their position moves the market. So if our trade aligns with theirs, there is a probability that our trades will also move, when we want it to move. Okay, so this is actually a deep concept and needs some proper scrutinization. And like I said, our time is fast spent. I've tried. Okay, this is 19 minutes past 6. Okay, so everything you need to be profitable, trust me, is in my mentorship. And I am not just giving you materials. You see how I break down, and this is how we run it in our mentorship program. I give room for my students to ask questions. Not all mentors do that. Sometimes they mute. I've also been in mentorship platforms and I suffered. I suffered, so I don't want my students to suffer. I'm doing this based on my own personal experience, and I don't want people to go through the same thing I went through. Okay, so this is it. I did break it down, how you identify the inefficiency. Okay, and I also explained the structures. I know when you're watching this, you'll be pausing it to get dint, but there's no problem. There's no problem. If this is what you gain for coming to today's class, there's no problem. All right, so this is a breakdown. Guys, you really do not want to miss what is coming up. So if you really want and you're serious about your financial freedom in 2026, make sure you are on this page. So now moving on, I think that will be all for now. I've given enough, right? I have given more than enough. So guys, I think
Sorry,
that's
are you
wrap.
putting the link on the chat? Sorry, are you putting the link on the chat?
Okay, let me put the
for
link.
Payment.
You can go through the website. Okay, let me just drop it. Okay, let me just drop the website right here so that the ritytradehub.com/mentorship. Okay, so this is it. All right, thank you so much, Mr. Macon, and everybody that has attended this class. And in my usual manner, I love to ask my students after the session, did you get value from today's class?
Sure. Yes. Yes.
Yes. Very valuable, man.
Yes.
Absolutely. Thank you so much.
Thank you, Madam Sandra. That's one of my amazing students. Okay, and in fact, I have so many of them here. I'm so proud that my students are making progress in this field as well. So thank you so much for coming in, and that's a wrap on today's class. To everyone that will be coming on board soon, I'll see you in class on Monday. And to others that may not be able to afford this, I perfectly understand. But trust me, if you put in the work, you will definitely be here. Okay? So for those who are yet to join, I will see you on YouTube. All right, so I'll be dishing more educational content on YouTube. However, you can see the difference between the YouTube content. As much as I put in much effort to make sure that you still understand the concept out there, you can still see there is a big difference when you sign up for the mentorship. Okay, so thank you so much, everyone, for coming in. Do have a great day ahead.
Have a wonderful weekend. Bye.
Okay. All right. Bye, Madam Sandra.
Bye bye. Thank you.
Bye.